Okay, so let's try to figure out what's going on in commercial real estate in 2025.
That's good.
We've got quite a few sources here.
Yeah.
The big one is the Deloitte 2025 Commercial Real Estate Outlook.
Okay.
And
Mm,
we've got some more focused articles
mhm.
from places like Fast Company,
Sure.
Realtor Magazine, and even a piece on FHA loans that we thought looked interesting.
It is an interesting mix.
Yeah, so we're going to try to sort through all this information and
Yeah.
pull out the stuff that will actually help you
Right.
make decisions.
Awesome.
So maybe we can start with the big picture, which
Okay.
is always the economy.
Yeah.
So Deloitte is painting a cautiously optimistic picture
Okay.
for the global economy,
Mm-hmm.
at least compared to the last few years.
Right.
They're projecting that global GDP growth will continue,
Okay.
but at a slower pace than we've seen recently.
Mm.
And it looks like India and Singapore are really leading the charge there.
That's interesting.
Yeah. And the other big thing is that inflation seems to be cooling off.
That's good.
And the report even indicates that we could see central banks easing interest rates as a result.
Yeah, and actually some have already started to do that.
Oh, really?
The European Central Bank and the Bank of Canada both made cuts back in June,
Wow.
and then the Bank of England followed suit in August.
So it seems like maybe there's a little bit of a domino effect happening.
Potentially.
What about the U.S. Federal Reserve?
They're holding steady for now, taking a wait-and-see approach.
Okay.
But Deloitte's economists are actually predicting 2 rate cuts by the end of the year,
Wow.
and possibly 4 more in 2025.
That would definitely influence how anyone would approach, buying, selling, or investing in the near future.
Absolutely, it would.
Yeah.
And it seems like the market is sensing this shift.
Okay.
Deloitte surveyed global real estate executives,
Mm-hmm.
and a striking 88% of them said that they anticipate revenue increases in 2025.
Wow. So that's a pretty big jump from last year.
Yeah, it is, and it could be a sign of renewed confidence.
So there's a little bit of light at the end of the tunnel.
It seems so.
Okay, but before we get too excited,
Right.
Deloitte also points to a potential roadblock.
Okay.
They call it the wall of maturities.
Mm-hmm.
And it refers to the billions of dollars in commercial mortgages that are coming due
Yeah.
in the next few years.
Mm-hmm.
And the problem is that a lot of those loans were secured when interest rates were much lower.
Much, much lower.
So refinancing at today's rates
Yeah.
could be a real shock to some property owners.
Yeah, it's definitely a valid concern.
Mm-hmm.
Fast Company even quoted an expert who's predicting an extend and pretend strategy.
What does that mean?
Basically, borrowers and lenders are just going to try to delay the inevitable as long as possible.
Okay.
But for those with capital ready to deploy,
Right.
this could actually be a unique opportunity.
Wait, so you're saying this refinancing squeeze could be a good thing?
Potentially, yes.
How so?
Well, think about it.
Okay.
Some owners might be forced to sell.
Because they can't refinance.
Exactly.
Okay.
So that could create some buying opportunities that weren't there before.
At a discount, potentially?
Possibly, yes.
Interesting.
So instead of fearing the wall, maybe we should be looking for the door.
I like that.
Yeah.
Okay, so if someone is looking to capitalize on this shift,
Mm-hmm.
which sectors should they be focusing on?
Good question.
Yeah.
Deloitte suggests looking beyond those traditional office spaces.
Okay.
Industrial and manufacturing are emerging as the new favorites.
Really?
Yeah, reshoring is bringing manufacturing back home.
Okay.
And the semiconductor boom is fueling even more demand for industrial properties.
We even saw in Fast Company that President-elect Trump has signaled plans to open up more federal land for housing development.
Oh, wow.
So that could be a game changer for the market.
It could be huge.
Yeah.
But it also brings up a lot of questions about the environmental impact and what kind of infrastructure we'll need to support all that new development.
Right. There's always a trade-off.
Always.
Speaking of trade-offs, Deloitte also highlighted the growing importance of multifamily housing,
Yeah, that's a good point.
with mortgage rates making homeownership challenging for a lot of people.
Right.
The demand for rentals is soaring.
It is.
Deloitte's report predicts a 10% increase in rental demand
Right.
over the next 2 years.
That's significant.
Yeah.
So multifamily is looking like a really resilient investment right now.
Especially if you're looking for something that can weather economic ups and downs.
Exactly.
So maybe it's time to shift gears from buy the dip to buy the demand.
I like that.
But it's not just about chasing hot sectors.
No, it's not.
Deloitte makes a strong case for sustainability,
They do.
emphasizing that it's no longer a nice-to-have, but a necessity.
It's essential.
Climate risks are real,
They are.
and they're impacting buildings everywhere.
Absolute.
Extreme weather events are becoming more frequent,
Mm-hmm.
and regulations like building performance standards are getting stricter.
Right. You can't ignore sustainability
Yeah.
anymore.
Okay, so environmentally, it makes sense.
Yeah.
But how does this translate to financial returns?
That's the question everyone wants to know.
Right, are we talking about green buildings and greenbacks?
That's the goal.
Okay, so tell us how this works.
Well, Deloitte actually found that investors are increasingly recognizing the financial benefits of sustainable buildings.
Okay, so break it down for us.
Okay, so first think about lower operating costs.
Okay.
Green buildings are often more energy efficient,
Mm-hmm.
which means lower utility bills.
Okay.
And that translates to higher profit margins.
Makes sense. What about attracting and keeping tenants?
That's another big plus.
Okay.
Tenants, especially younger generations, are actively seeking out sustainable spaces.
Interesting.
They're willing to pay a premium for buildings that align with their values.
Wow.
So for you, that translates to higher occupancy rates
Mhm.
and better tenant retention.
Makes sense. And what about the impact on property values?
Yeah, green buildings are increasingly viewed as premium assets. They can command higher prices in the market.
So it really does seem like a win-win-win.
It does.
Good for the planet, good for tenants, and good for the bottom line.
That's the idea.
But speaking of changing values,
Yeah.
Deloitte also highlighted a generational shift happening in the workforce,
They called it a generational opportunity.
which I think is a great way to frame it.
It is.
Yeah, because the industry is facing a wave of retirements
Right.
at the same time that it's struggling to attract younger talent.
Yeah. Gen Z and millennials have different priorities and expectations.
So how do you bridge that gap?
It's a challenge.
Yeah, what are these younger generations looking for in a career?
Well, they're digital natives.
Right.
So technology is key for them.
Okay.
They're also very purpose-driven.
What does that mean?
They want their work to have meaning,
Okay.
to make a positive impact.
Mm.
And they value work-life balance.
Okay.
And they expect a commitment to sustainability from their employers.
So it's not just about offering a paycheck anymore.
No, it's about offering a purpose.
So attracting talent is one thing.
Right.
Keeping them is another.
It is.
How does the industry adapt to these changing needs and expectations?
That's the million-dollar question.
Yeah.
It starts with creating a workplace that reflects these values.
Okay.
So things like flexible work arrangements,
Mm.
mentorship programs,
Okay.
a genuine commitment to diversity and inclusion.
Those are all really important.
They are.
And what about upskilling and reskilling?
Those are crucial too.
Yeah.
Companies need to invest in their employees' development.
Especially when it comes to technology.
Absolutely. The future of real estate will require different skills.
So it's adapt or get left behind.
Pretty much.
Speaking of technology, there's one more big trend we need to discuss.
Okay.
The AI revolution.
Mm-hmm.
Deloitte suggests that AI is poised to transform commercial real estate.
It is.
But they also acknowledge that many companies are still in the early stages of adoption.
Yeah, AI is definitely a game changer.
Yeah.
But it's not a magic bullet.
What are some of the challenges?
Well, things like data fragmentation
Yeah.
and security concerns are holding some companies back.
So it's not just about jumping on the AI bandwagon.
No, it's not.
It's about understanding the potential benefits
Right.
and the potential risks.
Exactly.
So the companies that are seeing success with AI are the ones that are being strategic
Mm-hmm.
and thoughtful about their approach.
Right. They're identifying specific areas where AI can add value.
Like what?
Things like automating tasks,
Okay.
improving data analysis,
Right.
and even creating new investment platforms.
So it's about using AI to enhance decision-making,
Yes.
not to replace it.
Right.
Okay, so there's a lot to unpack there.
There is.
But before we move on,
Okay.
we need to circle back to a source that you mentioned earlier.
Okay.
The one about FHA loans.
Mm-hmm.
I always thought those were strictly for residential real estate.
You're right. They typically are.
But what caught your eye?
Well, Realtor Magazine is reporting a surge in FHA loan popularity.
Why is that?
Well, because they make homeownership more accessible,
Okay.
especially in today's market.
Mhm.
They offer lower down payments and more flexible credit requirements.
So that opens doors for buyers who might not qualify for traditional mortgages.
Exactly.
Okay, so that makes sense for residential.
Yeah.
But how does this tie into the world of commercial real estate?
That's where it gets interesting.
How so?
Smart investors can actually use this trend to their advantage
Well,
by developing or acquiring properties that appeal to these FHA-eligible buyers.
so you're thinking about multifamily properties
Yeah.
that would attract first-time home buyers who are now able to enter the market
Mhm.
because of these FHA loans.
Exactly. It's about recognizing the ripple effect of these trends
Huh.
and positioning yourself to capitalize on them.
Interesting. So we've covered a lot of ground already.
We have.
Economic trends,
Mm-hmm.
hot sectors,
Yeah.
sustainability,
Mm-hmm.
the generational shift,
Right.
and even the surprising influence of FHA loans on the commercial market.
It's all connected.
We've definitely given our listeners a lot to think about,
I think so.
but there's still more to come in part 2.
Absolutely. We've only just scratched the surface. So, welcome back to our deep dive into the 2025 commercial real estate outlook.
We've already talked about,
Yeah.
the economic landscape,
Right.
the hot sectors,
Mm-hmm.
and even those FHA loans.
Yeah.
But we're not done yet.
No, we're not.
There's still more to uncover.
You know, one thing that really struck me as we were going through these reports, especially the Deloitte survey,
Okay.
was just how much emphasis there was on data and technology.
You're right. It seems like commercial real estate is finally
Yeah,
catching up to the digital revolution.
it really is.
81% of the executives they surveyed
Wow.
said that data and tech are their top spending priorities for 2025.
It makes sense, though.
Yeah, it's a pretty big shift
It is.
for an industry that's historically been pretty slow
Yeah.
to adopt new technology.
Right.
I think the pandemic really accelerated this trend.
I think so, too.
That rapid shift to remote work
Right.
and the need for virtual tools
Mm-hmm.
really forced a lot of companies to embrace technology in ways they hadn't before.
They had to.
And now, with AI becoming more sophisticated,
Right.
we're seeing even more opportunities for innovation.
Yeah.
Deloitte highlights a whole range of applications,
Yeah.
from automated property management systems
Okay.
that can help streamline operations and reduce costs,
Got
to predictive analytics
Mm.
that can help investors identify emerging trends.
Yeah, and make better decisions. It's all about using data to gain a competitive edge.
But it's not just about blindly adopting every new gadget or software.
No, it's not.
Deloitte cautions against rushing into this head first.
Maybe you do.
They emphasize the importance of a strategic and incremental approach.
Right.
One that's tailored to the specific needs
Yeah.
of each business.
Find the right tools for the job.
Exactly. And they also stress the importance of data security,
Oh, that's...
with cyber attacks becoming increasingly sophisticated.
Yeah,
Protecting sensitive information is paramount.
it is.
We're talking about financial records,
Mm,
tenant data,
right.
property details.
It's a lot of valuable information.
Yeah. A data breach could be devastating,
It could.
both financially and reputationally.
Absolutely.
So while it's essential to embrace technology,
Right.
it's equally important to do so with a strong focus on security
Yeah.
and risk management.
It's a balancing act.
It is. Okay, so let's shift gears for a moment
Okay.
and talk about another critical piece of the puzzle,
Okay.
talent.
Yeah.
Deloitte's report really emphasizes the workforce challenges
Did you?
that are facing the industry.
They call it a generational opportunity.
Right, which I like.
Yeah,
It's a good way to frame it,
it is.
because it highlights the fact that this isn't just about replacing retiring workers.
No.
It's about attracting a whole new generation of talent
Exactly.
with different skills,
Mm-hmm.
priorities,
Right.
and expectations.
We're talking about Gen Z and millennials.
Right, the digital natives
Yeah.
who are used to instant information
Mm.
and seamless technology.
Right. They're not just looking for a job.
They're looking for a purpose
Exactly. They want their work to have meaning.
to make a positive impact.
Right. And they're not afraid to walk away from companies that don't align with their values.
So the commercial real estate industry needs to adapt
It does.
if it wants to attract and retain this talent pool
Yeah. It's no longer enough to just offer a competitive salary.
and benefits package.
It's not.
You're right. It's about creating a culture
Yeah.
that resonates with these younger generations.
Right.
One that's flexible,
Mm-hmm.
collaborative,
Yeah.
and purpose-driven,
A culture that embraces technology
promotes sustainability.
and prioritizes diversity and inclusion.
Fast Company even pointed out that the incoming administration's focus on economic development,
Oh, yeah.
particularly in underserved communities,
Mm-hmm.
could further intensify the competition for talent.
It could.
You
Yeah.
know, companies across all industries are going to be vying for skilled workers.
They are.
So it's even more crucial for commercial real estate
Yeah.
to position itself as an attractive career path.
It is. So how do they do that?
Right. How do they convince those bright, ambitious individuals
Yeah.
that a career in commercial real estate isn't just about buying and selling buildings,
Right.
What about shaping the future of our cities?
Yeah.
Creating sustainable communities,
Mm.
making a real difference.
I think it's about highlighting the impact and the purpose
Okay.
that's inherent in this industry,
Okay.
showcasing the opportunities to innovate,
Mm-hmm.
to use technology to create more efficient and sustainable buildings,
Yeah.
to develop vibrant mixed-use communities
Yeah.
that enhance people's lives.
It's about walking the walk.
It is.
Companies need to invest in their employees' development,
Absolutely.
provide training and mentorship opportunities
Yeah.
that help them acquire the skills they need to thrive.
Right. Upskilling and reskilling are essential.
They are. Okay, so speaking of tangible impacts,
Yeah.
let's talk about that wall of maturities.
Okay.
That looming wave of commercial mortgages coming due
Right.
that we mentioned earlier.
Yeah.
Deloitte suggests this could create some real turbulence
It could.
in the market.
Yeah. Especially with interest rates still being relatively high.
Yeah, it's a significant concern,
It is.
especially for borrowers who locked in those super low rates a few years back.
They could be facing a serious payment shock.
Yeah, when it comes time to refinance
Right. And that could lead to defaults.
and foreclosures.
Yeah. Especially if we see a broader economic slowdown.
So how do we navigate this potential turbulence?
It's all about risk management.
Okay.
If you're a lender, due diligence is more important than ever.
Okay.
You need to carefully assess the financial health of any potential borrower
Right.
and stress test their ability to handle higher interest rates.
Okay. And what if you're a property owner?
If you're a property owner, you need to have a solid plan in place
Okay.
to manage your debt,
Mm-hmm.
explore refinancing options early on,
Okay.
and be prepared to adjust your strategy if needed.
So it's not about avoiding risk altogether.
No, it's not.
It's about understanding it, mitigating it,
Yeah,
and even leveraging it to your advantage.
exactly. Real estate will always have an element of risk,
It will.
but that's also what makes it so dynamic and rewarding.
Right. The key is to be informed,
Yeah.
strategic,
Mhm.
and prepared to adapt to changing market conditions.
Absolutely.
Well said. I think we've covered a lot of ground in this second part
We have.
of our deep dive.
Yeah, we talked about the growing importance of data and technology,
Yeah.
the challenges and opportunities of attracting and retaining talent,
Right.
and the potential impact of the wall of maturities on the market.
Yeah. And we also talked about strategic risk management
We did.
in this constantly evolving landscape.
Right. And while we've talked about some of the broader trends
Yeah.
shaping the industry,
Mm.
we haven't yet explored the specific challenges
Okay.
and opportunities
Yeah.
that are unique to each sector.
Right.
So that's where we'll focus our attention in the final part of our deep dive.
So stay tuned for part 3,
Yeah.
where we'll break down the outlook for offices,
Okay.
industrial multifamily,
Right.
retail, and hospitality.
Sounds good.
All right, so we're back, and we've talked about a lot of big picture stuff.
We have.
But now it's time to really dig into the specifics,
Yeah, let's get granular.
sector by sector.
Exactly.
What are the challenges and opportunities
Right.
that are out there in 2025?
Because every sector is different.
Yeah, what works in industrial might not work in retail.
Exactly.
So let's start with a sector that's been getting a lot of attention lately,
Okay.
the office market.
Yeah, the office market.
Deloitte's report paints a pretty mixed picture.
It does.
They highlight the ongoing challenges.
Right.
But they also point to some potential bright spots.
Okay.
Fast Company, though, they're a little more pessimistic.
Yeah. Some of their articles are predicting a continued decline in office values.
Really?
Yeah, they cite those high vacancy rates
Okay.
and the rise of hybrid work models.
It does seem like the days of everyone commuting to a centralized office 5 days a week
Yeah.
might be over.
Maybe.
So does that mean the traditional office space is going extinct?
Not necessarily.
Yeah.
Deloitte suggests that while some companies are downsizing their office footprint,
Mm-hmm.
others are actually looking for more space,
More space.
but a different kind of space.
So it's not just about square footage anymore.
No, it's not.
It's about functionality
Right.
and appeal.
Exactly. With more people embracing these flexible work arrangements, they're looking for office spaces that offer a more comfortable,
Okay.
amenity-rich environment.
So what kind of amenities are we talking about?
I think natural light,
Okay.
outdoor spaces,
Mm-hmm.
fitness centers,
Sure.
on-site cafes, even childcare facilities.
Wow, so it's really about creating a destination,
It is.
not just a workplace.
Exactly.
So for investors who are looking at office properties,
Yeah.
the key is to adapt.
Adapt.
Find properties that cater to these evolving needs.
Right. And preferences.
But there's another element that Deloitte emphasizes.
Okay.
that goes beyond these amenities.
What's that?
Sustainability.
Yeah, sustainability is huge.
Green buildings are becoming increasingly important,
They are.
and not just for environmental reasons.
Right. Companies are realizing that a commitment to sustainability
Hmm.
is a great way to attract and retain talent.
Especially those younger generations we talked about.
Exactly.
And let's not forget about the potential cost savings.
Yeah, energy-efficient buildings can really help reduce operating expenses.
So it's a win for both owners and tenants.
It is.
So the office sector might be facing some headwinds,
It is.
but there are still opportunities out there.
There are.
For investors who are willing to adapt, think creatively.
And prioritize sustainability.
Okay, so we've talked about the office market.
Mm-hmm.
Let's move on to a sector that's been doing really well.
Oh?
Industrial and manufacturing.
Yeah, those sectors are hot.
Deloitte's report confirms what we've been seeing.
Yeah.
Reshoring is bringing manufacturing back to the U.S.
It is.
And the semiconductor boom is fueling even more demand.
For industrial properties,
Exactly.
warehouse space distribution centers, manufacturing facilities.
Fast Company even suggests that President-elect Trump's infrastructure plans
Right.
could accelerate this trend even further.
It's possible if those plans actually happen.
Yeah, if they come to fruition,
We could see a huge surge in construction activity.
which would be great
It would.
for industrial and manufacturing real estate.
It would, but even without those infrastructure investments,
Right.
these sectors are positioned for growth.
Yeah, e-commerce is still expanding,
It is.
which means we need more logistics.
And distribution space.
And there's a big focus on supply chain resilience these days.
There is.
So companies are diversifying their manufacturing operations
Right.
and bringing production closer to home.
So for investors looking for long-term growth,
Yeah,
industrial and manufacturing properties look pretty good.
they do. What are some of the key things investors should be thinking about?
Well, location is always important.
Okay.
Proximity to transportation hubs, major highways,
Okay.
and a skilled workforce are all essential.
And of course, you need to consider the specific needs
Yeah.
of the tenants you're targeting.
A distribution center for an e-commerce giant
Right.
is going to have very different requirements
Yeah.
than a manufacturing facility for a high-tech company.
Okay, so let's talk about another sector that's been performing well.
Okay.
Multifamily housing.
Yeah, multifamily's still going strong,
With mortgage rates so high,
right?
home ownership is a challenge
It is.
for a lot of people.
So rental demand is strong?
Deloitte's even predicting a 10% increase
Wow.
in rental demand over the next 2 years.
That's significant.
It is, and Realtor Magazine points out that while FHA loans are helping some first-time buyers
Right.
enter the market,
Mm-hmm.
high home prices and interest rates are still pushing a lot of people
Yeah.
towards renting.
So multifamily is looking like a pretty resilient investment.
It is, even in the face of economic uncertainty.
Exactly, but it's not just about providing shelter anymore.
No, it's not.
The multifamily market is getting more competitive.
How so?
Developers are really upping their game
Okay.
when it comes to amenities and services.
What kind of things are we talking about?
Today's renters, especially millennials and Gen Z, they want a lifestyle.
Okay.
They want community spaces,
Yeah.
fitness centers, pet-friendly amenities, on-site concierge services,
Wow.
a seamless digital experience.
But it's almost like the hospitality industry is merging
Yeah.
with multifamily.
In a way, it is.
So developers who can create those unique living experiences
Yeah.
and foster a sense of community. Those are the ones who are going to stand out.
And attract those high-quality tenants.
Okay, so we've covered offices,
Yep.
industrial and multifamily.
Mhm.
Let's touch on a couple of other sectors
Mhm.
that are going through some pretty big changes.
Mhm.
Retail and hospitality.
Yeah. Retail has been struggling.
It has the rise of e-commerce
Right.
and shifting consumer habits.
It's been tough.
But Deloitte says it's not dead.
No.
It's evolving.
Evolving.
They highlight the trend towards experiential retail.
Experiential retail. What's that?
It's about creating a shopping experience that you can't get online.
Okay.
So think pop-up shops, interactive displays, personalized services,
Yeah.
even community events.
So it's about making shopping an experience.
Yeah, an enjoyable, engaging experience.
Right. A reason to get out of the house and connect with other people.
Makes
Yeah.
sense. What about hospitality?
Well, the pandemic obviously hit hospitality hard,
It did.
but it's bouncing back.
Yeah,
People
right.
are eager to travel again,
Yeah.
which is driving demand for hotels and resorts.
Okay, but just like retail,
Yeah,
the hospitality industry is also evolving.
it is. So what are travelers looking for these days?
Yeah, what are they looking for in 2025?
Well, personalization and authenticity are key.
Okay.
Travelers want unique, memorable experiences
Hmm.
that go beyond the typical tourist traps.
Okay.
They're also increasingly blending business and leisure travel.
Right, the bleisure trend, which
Exactly.
is driving demand for spaces that are both comfortable for work
Yeah.
and conducive to relaxation.
So flexibility is important.
It is, and offering that multifaceted experience.
Exactly. The hospitality industry needs to adapt to these changing needs and preferences.
So we've covered a lot of ground
We have.
in this final part of our deep dive.
We've dissected the outlook for those key sectors.
We talked about the challenges facing the office market,
Yeah.
the opportunities in industrial multifamily,
Mm-hmm.
retail, and hospitality,
And we talked about those underlying trends
Right.
that are shaping the industry.
like technology, sustainability, community-centric development.
Yeah, and attracting and retaining top talent.
It's clear that the 2025 commercial real estate market
Yeah.
is a dynamic landscape
It is.
full of challenges and opportunities.
And those who are willing to adapt,
Yeah.
innovate, and embrace change.
Those are the ones who are going to thrive.
Exactly. So as you navigate this evolving market, stay informed, be strategic, and don't be afraid to think outside the box.
And remember that real estate is ultimately about people.
It is.
It's about creating spaces where people can live,
Work.
play, and connect.
Keep that in mind, and you'll be well on your way to success in 2025 and beyond.